Major crypto trap has been set. You can see yesterday both the bulls and the bears got absolutely smashed around in their positions. You got this Darth Maul wick over here, big push up to the upside, and then massive slam down in the opposite direction right afterwards. So we'll cover some of the possible reasons why that happened, as well as on top of that, what the levels are that you need to look at next. So looking at the crypto bubbles chart over here, you can see that one of the coins that stands out is HEX. So HEX is absolutely pumping, and that is because of the imminent PulseChain launch, which Richard Hart has said should be happening within the next 7 days. So a lot of the guys obviously pumping up HEX because they're going to get a copy of that HEX, which is going to be PHEX on the PulseChain network. And anyone else that's out there who has any coins on their MetaMask or decentralized exchange, they'll be getting a copy of those as well on the PulseChain network if they took a snapshot from your MetaMask. So keep an eye out on that. In the coming weeks, you'll get free money for that. And then also, it's exactly the 1 year anniversary from the massive lunar collapse. So there it is. Never seen anything like it in my life. What was the percentage down from top to bottom? It did pretty much 100% straight to zero. Consequently, since then it bounced, and it's still, at least on this one, is down 99.16%. So if you survived that, congratulations, you're still here. You stayed strong through it. I know a lot of the Banter community, because of Rand's conviction in the project, would have been involved in this. So if you've stayed through all of that and you've made it through to the other side, a big congratulations to you. Well done. There will be many more opportunities like this in the future, hopefully not to the downside though. All right, yesterday we did get the CPI inflation data, which came out a little bit better than expected, and consequently that's what led to the market pump. But soon after that, the market was immediately slammed down on the back of fake news around the US dumping some of their Bitcoin. Remember, they have something like 40,000 Bitcoin, which they're going to be dumping in multiple increments over the coming months or years. But it was fake news. They weren't dumping, and price got slammed to the bottom side. But we outlined exactly, almost to the dollar, how this would play out. And that was based off liquidity levels. We're looking at liquidity to liquidity. And I'll show you the next zones that we're going to be looking at on the low time frames leading into tomorrow and the weekend. But first, there's also an important thing that's coming up today, which is going to be the core PPI data. That's going to be for the month on month, and then the normal PPI data. So that gives a little bit of an indication as well what the Fed may do at the next interest rate hike. Not too much to comment on the S&P 500. Again, still in no man's land, right in the middle of this expanding megaphone pattern. We're waiting for it to touch one of the extremities, either the top side or the bottom side. But definitely risk is more to the downside, because of course price action is pushing into major resistance over here. You have your range high coming in at 41.80, and then the whole gray box territory is going to be major resistance there. Now, something different has happened over here on Bitcoin. If it depends on which exchange you look at as well, but if you're using Binance as your exchange, you guys know that one of the things that I like to use for my high time frame analysis is going to be the Lucid 𝗧, which is a stop and reversal indicator. There's many variations of these stop and reversal indicators, but the one that's dear to me, which has really worked over the years, has been the Lucid 𝗧, which is an adaptation of the normal 𝗧. And consequently, you can see the asterisks on the top there. Now, it means it's been broken to the downside. Now, you'll remember from earlier this week, I said there was a possibility that this could potentially happen, and it creates an interesting predicament. That predicament being that there's very strong support around that $25,000 level, and on many different time frames, and it doesn't matter how you slice the market, it really looks like a good buy the dip opportunity around that 25k level. But the predicament comes in because now you have to start to play a defensive game. When you start to see things like this breaking to the downside, or at least when that pops to the upside, that means the support, these Lucid 𝗧s were support, the support has been lost, and now you're looking down to those low levels. The middle of the Gaussian channel in the weekly chart is coming in at 25,600. It matches up as well with the 21 exponential moving average, which is the yellow one, also coming in at that same level. And you'll see on multiple time frames, there's a lot of confluence around that zone. What about Ethereum? Ethereum is yet to break its Lucid SAR. It came again, a wick directly into it, almost for the third week in a row now. And you know the story, the more times that support gets hit, the more likely it is to eventually break over time. So it constantly weakens it like a hairline fracture. Eventually it's going to crack through. And that is the breakdown level. We have it right there labeled at, let's just quickly click on that, $1,789.50. So marked by the blue writing on the right-hand side of the chart. That is your area, right? Once you start to break through that level, you lose the Lucid SAR, it pops to the top. That means the top side now becomes resistance, the support is lost, and consequently, there's a real possibility that this is going to go much, much lower. Once you lose your 21 exponential moving average, the yellow one, then Ethereum could potentially go all the way back down to the bottom side of the Gaussian channel. So currently, in a nutshell, pressure is towards the downside until certain levels get reclaimed. I'll show you on the daily chart which levels need to be reclaimed for the bulls to take back control and for that pressure to be alleviated. So weekly chart over here, still area of influence. We got the diagonal, this area over here matching up with the 200 moving average on the weekly chart is coming in right there at 26,000. Another level of confluence. So expect that price could potentially push into there and have a reaction and then bounce off of that level. Same thing over here, calling for 26,000 on the high time frame moving average on our 4-day chart. And then you can see over here, looking at total 2. Total 2 has come almost directly into the trend line. Total still hovering a little bit higher up from its trend line. It's got a little bit of room to the downside to get to 986, which is pretty interesting, right? Because Bitcoin is still showing that it could have a lot more downside where it's broken its Lucid SAR, but Ethereum is yet to have done that. And that might be one reason why Total 2 has come into the support level and is holding up over there. Total 3 also has come into the mid level. Now your job is to wait and see. It's a sit and wait approach where you just want to see what is the reaction off of the zone. Is it going to manage to hold the mid range at 347 billion for the market cap on Total 3? If so, and it can do that, then you'll be looking for a bounce up. Then you need to once again be on lower high watch. But there's a lot of risk to the downside over here if you are holding altcoins. And I'm sure you can tell by your portfolio. If you are an altcoin holder, you'll probably notice that your portfolio is down significantly compared to what it was a couple of weeks ago. And it hasn't even reached the range low yet. So just understand that you're dealing with a lot of risk. Now, one thing that I'm looking at is potentially a pattern like this playing out. Ultimately, it's just a distributive pattern. If you look at Bitcoin chart on the daily, you'll see a lot of resemblance over here where you have distribution comes down. This was that $97,000 level, big push up, and then it creates that Bart-Simpson pattern whereby you could get full distribution towards the downside. But key levels need to be lost. Once you start to drop below that $26,500 level, you want to look down to 25, see how the momentum is shifting into that area. If the momentum is coming in aggressively into 25, it's probably going to smash through, and then you have the possibility of this whole distributive pattern playing out. If it comes in nice and slow and quickly starts to find support, then of course you can negate this, cross it out, and say that hopefully price is going to bounce. Now, using our different channels and our pivot levels on Bitcoin, we can see the level to reclaim is 28,083. Let's just round it down and call it 28,000. So Bitcoin needs to get back above 28,000, and more importantly, on a closing basis. It can't wick up there because yesterday it did that. As you can see, we wicked directly into our EMAs over here. So let's just quickly double check. The EMAs I have is the 12 and the 24, 12 being the yellow, 24 being the pink. You got your wick directly right into that EMA, and consequently price came down. Now, same thing, you need to start closing above that, and you've got to contend with those EMAs. Ultimately, I would say expect more downside is, well, from a probable standpoint, we have no certainties over here, but it's more probable that the downside is going to play out over the coming days and weeks than the upside because you have a lot to contend with over here. So still looking for this scenario to kind of play out. That will eventually come into the 200 exponential moving average, which is rising, and that would match up with something like this. So you can see the major channel going to the upside, and then you can see the minor channel, downward channel within that channel, and that matches up all at this 26K level, lining up with your 200 EMA. It's a nice level of confluence, lines up with the 200 weekly moving average as well. Now, what about Ethereum? Ethereum's pivot level You can see also stuck below the pivot level. I've written it out over here. Your pivot level on Ethereum is $1,864. Ethereum needs to get back above that level. Same thing as Bitcoin. It pushes up directly in through the 12 exponential moving average into the 24, and a straight rejection down from that zone loses the pivot level once again. And therefore, this will also be calling for low prices towards the 200 EMA at around 1694 for a potential bounce. And then we can take it from there. Okay, moving on. If that does start to play out, those lower downside targets, then you're probably going to have a confirmation of your head and shoulders pattern, which could lead to lower prices as well. So just be cognizant of that. Keep that in the back of your mind. What about the 4-hour chart? You can see now the stochastic RSIs are starting to or move towards the downside over here. So you got pressure to the downside matched with the cross of the EMAs. EMAs have crossed down, 50 crossed below the 200. Price moves directly into the 50 EMA, rejects off that, comes up one more time, strong rejection off of that side. So it's showing you now that it tried to test that level, and it's proven that it is resistance indeed. Let's see Ethereum. Pretty similar picture over here. RSI stochastic also coming towards the downside. Price pushes up, goes through all the way through both the 50 and the 200 EMA on the 4-hour chart, rejects. Second one comes into the 200 EMA, test that as a resistance level, proven correct, comes down. Now you'll remember on Ethereum, we have the quarterly level coming in at 1821. So this horizontal zone that I've marked out, 1821. Once you start to lose that, it's going to distribute very, very quickly. Also, if you look over here, I can see that the BBWP, which is essentially an indicator that suggests what the volatility may look like, is coming off the lows, right? So the volatility is only just starting to expand over here on Ethereum, which means that there is a lot of momentum that could still come into the market. And here you have Bitcoin's one. Bitcoin's one's also low, but not as low as Ethereum. All right. Yesterday, I'll claim the clout. Show me firstly, before I claim the clout, are you present? Are you here? We got 𝗕𝗀𝗵, we got Bella, we got Whale Talk, Krishna, Nick, we have Nelson, Sue, Chaos. Welcome, Chaos. How's it going? Brandon, Jordan, Timeout, Duan. We got Rob, Yasin, Banter Girl, JB, Matt, and we have Tabo. Thank you so much all for joining, guys. You're always welcome here any day of the week. Please smash the like button. Help us to get the content out. I think that the show is shadow banned, and the views really got knocked yesterday because Rand wanted to run a little bit of a political show over there, challenging the Democrats being after crypto. I don't know if that's the reason, but please smash the like button. It really helps to get the content out there. And then let me know in the comments below, did you get caught off guard with the move that happened yesterday? So this is what we outlined on the show yesterday. And I said, I covered this scenario in the morning show. We're looking for a big push up by Bitcoin into the top side of the channel. That was based off of a liquidity hunt, right? So we were looking for shorts to get squeezed out of those lower regions, meaning that the shorts had to be forced to close their position. And consequently, when they close their position, what are they doing? They're essentially market buying back into the market, and that creates that quick cascade in price back to the upside. And that's exactly what we got. So if you have a look over there, I said that was the live price action. Price action came into that zone. And then I said, and there's the next part of the story. Let me know if you watch the show. And then I said I would be looking for it to come back down from that zone. Now, fair enough, I didn't expect it would happen as quickly as this, but there was the move, pretty much exact. Big push up over the top side of the channel, and then immediate rejection and slams it back down into the ground. Now, I knew this would happen because the market has low volume and it's got a lack of liquidity, and therefore the market is ultimately going to gravitate towards liquidity levels. Now, I always change my strategies. I'm sure you guys will notice it's very market dependent because I don't always trade like this. It depends on the environment that we're in, and that is the environment right now. Low volume, low liquidity. Therefore, I'm focusing more on the ranges and with a focus on liquidity as well. And that's how I was able to call that level out. So here we have it. This is where we're at with the current price action. Now, what would I say from this? Remember, this was also a bear flag, right? A bear flag with a measured move. If you took that as your pole and you clone that and move it to the downside, I guess I'll just do it again. Since not that many people saw yesterday's show, we'll clone it. We'll bring it to the downside over here. your total measured move, if this plays out all the way to the bottom side, you're looking at just under $26,000. Again, another level of confidence with everything that we're seeing. But you had a big wick down, high volume over here. And what are we doing now? We're consolidating. I'm going to delete that just to clean it up. The point is that at the moment, risk continues to remain to the downside in the very short term. I'm on the 15-minute chart. And that's because price is stuck below a key area, right? You can see the horizontal support or resistance over here. What would have been previous support, this whole area's previous support, is now starting to flip into resistance. And that is in agreement with the point of control from the volume profile on the right-hand side. You can see the red line that's printed all the way across over here. That's going to be a resistance zone, and we're coming directly into that level right now. So what are you looking at over here? Well, ultimately, I would just be looking at the higher highs and higher lows, but expect that there's a possibility that price is kind of going to range within this region. So this region, take the trend at the top of the wick over there and the bottom of the wick, most likely you're going to form some sort of a range within that level. But looking at your levels, look at the closing candles over there. So that's your close. Okay, then you got lower high, and then this is a bit rounded and consolidative, but nevertheless lower high, and then same thing over here. You have a higher low in relation to this area over here, another higher low, but then look over here, lower high, it starts to break down. So I'm kind of watching this pattern on a low time frame. You might see it grind back into this level one more time, and then still watch for a reclaim. Watch for the change of structure when it breaks the structure. So like this. Let's say it continues down like this. I'll quickly draw it all in, and you're coming down, you're coming down, you're coming down, and you maybe sweep one more small time like that. The break of structure, you get back above this level, break above those highs, hold, higher low, break through that resistance, the pink box zone, break through, and the resistance is coming in over here at about 27,500 to about 27,600. Clear that level, maybe you retest into that zone. That's a very safe long then. Long over there, and then we target the top side of the liquidity. Your stop would go something like this. This is just the trade idea that I'm giving you. So your entry would be something like that. Stop would then be below those prior lows, and then you're targeting all the way back up to the top side of the range. Let me know in the comments, does that make sense? Does that help? I hope it does, because yesterday I did tell you in the show, I said you'll be looking for a swing failure pattern. And this is kind of what's playing out right now. So far, it is a swing failure pattern, right? Because where did you have your range lows? Here's your liquidity. This was the range lows at $27,230. Did you get the swing failure pattern? Yes, you did. Let's quickly zoom in over there. So price swung to the downside. There you can see the wick, came back, and it started to close back into the range. So your swing failure pattern is confirmed. But now you just want to break the structure over here with the lower highs and start to create higher highs. And then you can play that move out potentially to the upside. If it can't do that, then of course you have to take the bearish case. And this is talking to short time frame traders, right? So the long scenario is not for a swing trader. It's not for those of you who are looking to buy, spot, and hold. I wouldn't recommend it, because I think that prices could still go much lower. This is for the leverage traders. The longer term traders, you're going to be looking for better support, maybe around that 26K level. Ultimately, we probably come there. Okay, I think that's enough on Bitcoin. The other thing that I wanted to show you over here is from Brad Shareman. This just came out, and this just shows the risk appetite in the space, right? The guys cannot contain themselves. We got Crypto Bros, which has been made as a coin now. There you got the contract address. I definitely do not recommend buying it, but have a look at this video over here.
Crypto Bros make money literally by making money, and they've made over $1 trillion. Out of thin air. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government. Crypto Bros make money.
Can you believe that? So he's literally saying that the US government, it's fine if they make money out of thin air, but crypto guys can't. And crypto has got rich off of these things. And here you have the chart. They literally created. This just came out yesterday. Crypto Bros. There you have it. Holding a trend line on DEX tools. Bros against wrapped ETH over here. This is represented in the dollar form. Holding a very, very simple trend line over here. Again, I really cannot condone that you buy this. I do not recommend it. It's a gamble. If you were to get into something like this, know that it's a gamble and it's most likely going to zero, probably sooner than what you can expect. But there you have it, the risk appetite for crypto. That's the point of that. I just wanted to show you crypto has a major risk appetite and guys are still looking for up only. Now, I also wanted to bring up the Bitget token. So the Bitget token has actually been doing phenomenally well. It's one of the few tokens that's in an uptrend. Have a look at that. You can see the chart constantly grinding up, creating higher highs and higher lows. And I think one of the reasons is that they don't have KYC. So a lot of the pressures that have been put onto other exchanges have now moved those guys away onto Bitget. And consequently, I wanted to show you the price. If you hold 4,000 Bitget tokens, that's going to cost you just under $2,000. Now, the reason why I want to bring that up is because they currently have a promo which is going on. So it's called the Bitget Super Airdrop. All you need to do is hold BGB, in which you're going to get free tokens. You need to hold it for 15 consecutive days, and it's going to launch around the 23rd of May. Then you're eligible for free airdrops. They'll basically drop it straight into your Bitget wallet. So if you want to participate in that, fund your account and then essentially stake those tokens, the $2,000 worth of tokens, which is 4,000 tokens, and they will calculate that based off of a snapshot based on how many BGB tokens you have in your account. And when they do these airdrops, remember, seed round investments, they're always difficult to get into, but if you do it like this way, they use the masses to control influence, and therefore they're able to get into these launch pads. So here you have it, hold BGP to get BIP1. This is basically it. This is what you're looking at. So go through to the link in the description below. If you don't already have an account, click show more over there. Go through to the bottom over here, sign up using my link over there. Not only do you get up to an $8,000 sign up bonus when you sign up and deposit money into that account, but it does also help me. This is basically the way that you can tip me, if you want to think of it like that. The exchange fees get split. So every transaction that you make would usually, all of it goes to the exchange. But because I referred you, they'll give me a very, very small amount of that. So check that out over there if you do want to participate. And then here's PulseChain, right? PulseChain. So there's the tweet from Richard Hart. He says the PulseX.com and the PulseChain.com mainnet are estimated to launch publicly in less than 7 days. That is enormous news. I'm somebody that did actually sacrifice for this. So full disclosure. Why do they call it sacrifice? Obviously because they want to navigate around the SEC saying that it's not a security. That's the only reason for the term sacrifice. So keep an eye on that. If you have not participated in the sacrifice phase, when the airdrop happens and it goes into the mainnet, you'll still have a chance to buy it on the open market. I do think that it's something that's probably going to melt faces in the future. All right, let's have a look over here at the spot and the cumulative volume deltas. So spot is starting to dwindle over there. That's not necessarily a good sign. Leverage traders continue to short the market, denoted by the white line over here from the futures traders on the cumulative volume delta. And consequently, that's why prices are going down. If spot starts to pick itself back up again over here, then they'll force the leverage traders to close their shorts, and then you'll see a big move up. Liquidity. So since it's a low volume environment, what are your levels that you're looking at? 28K is the stronger liquidity. Currently, the upside liquidity is still a possibility, but most likely that's going to push into there and probably reject from that zone once again, because that is in line with all our different EMAs, which are acting as resistance as well as the pivot level, right? So don't be surprised if you see price move back into the 28K level first, capture that liquidity, and then come down lower. You can see 26.5, 27K, there is also more liquidity within that zone. And you can see the shorts are heavily stacked over here. They got a little bit squeezed. That's marked by the change that you have. So you can see the uptick over here from the short traders, and then immediately they piled back into the market, and therefore that 28K is still a possibility. If you see price go back up to that and you're stuck in long trades, it's an opportunity to maybe take some off of the table, reduce your risk, and potentially even find a short trade opportunity for the future. So I also wanted to bring up the liquidation levels. Let's quickly bring that up. I see it's not loading. All right, liquidation levels. So yesterday I said, let's have a look at the liquidation levels. I said, expect that there would be a big liquidation. And you can see, let's quickly go into this chart over here. There it is. You got the shorts basically which got liquidated and more longs that got liquidated on this side, and $100 billion was liquidated yesterday. So quite a substantial amount. And I think now we're just going to play it from level to level. We're watching from range perspective and liquidity to liquidity. So a relatively quick show, guys. I think that's about it. Please make sure you smash the like button, hit the bell notification, and then also subscribe to the channel. We have one of the quickest growing channels in the world. Subscribers ticking in each and every day. And that's it from me. I will see all of you on tomorrow's video. I hope you all have an absolutely fantastic day. Trade safe. Cheers for now.